Welcome back. You're watching The Money Show on ET now. Well, interest rates have really been the talking point after State Bank of India Kotak Bank has cut their interest rates. Let's go across now to my colleague Priyanka Iyer. She has a report on what exactly is causing some of the biggest banks in India to be in a race to provide the lowest interest rates to their customers.
Well, as it seems like another home loan rate war that we are seeing after SBI announced yesterday that it is cutting home loan rates from 6.80% to 6.70% for home loans up to 75 lakh. Kotak Mahindra too followed it up with another announcement saying that they are also cutting home loan rates to 6.65% from 6.75%. So, for a day yesterday until Kotak Mahindra Bank announced this, SBI was offering the lowest ever interest rates. But now Kotak Mahindra Bank is again the bank that is offering the lowest home loan interest rates. Of course, Kotak Mahindra Bank has said that this rate is applicable on all loan amounts, but there are terms and conditions for each category that we will have to look into and work out the home loan rate for each person. But that said, both these banks have said that these rates are applicable only till 31st of March. We will have to see whether ICICI Bank or HDFC Bank, which are currently offering 6.80%, if they also come up and cut down rates further. That is something that we'll have to watch out for. But Kotak Mahindra is again, this is something we have seen the previous time as well, that SBI announced a rate cut for home loans and Kotak Mahindra came up with an offer of the lowest interest rate. And of course, home loans is where all banks are bullish right now. There is a lot of traction as well, and it remains a low NPA zone for banks because, also because of the sentiment value that is attached, as Dinesh Khara, chairman of SBI, had said that people are more likely to pay back these loans. So we will have to see whether more banks come in and announce rate cuts as well.
All right. Well, let's talk about this a bit more. Joining us. Welcome back. You're watching The Money Show on ET now. Well, interest rates have really been the talking point after State Bank of India Kotak Bank has cut their interest rates. Let's go across now to my colleague Priyanka Iyer. She has a report on what exactly is causing some of the biggest banks in India to be in a race to provide the lowest interest rates to their customers.
Well, as it seems like another home loan rate war that we are seeing after SBI announced yesterday that it is cutting home loan rates from 6.80% to 6.70% for home loans up to 75 lakh. Kotak Mahindra too followed it up with another announcement saying that they are also cutting home loan rates to 6.65% from 6.75%. So, for a day yesterday until Kotak Mahindra Bank announced this, SBI was offering the lowest ever interest rates. But now Kotak Mahindra Bank is again the bank that is offering the lowest home loan interest rates. Of course, Kotak Mahindra Bank has said that this rate is applicable on all loan amounts, but there are terms and conditions for each category that we will have to look into and work out the home loan rate for each person. But that said, both these banks have said that these rates are applicable only till 31st of March. We will have to see whether ICICI Bank or HDFC Bank, which are currently offering 6.80%, if they also come up and cut down rates further. That is something that we'll have to watch out for. But Kotak Mahindra is again, this is something we have seen the previous time as well, that SBI announced a rate cut for home loans and Kotak Mahindra came up with an offer of the lowest interest rate. And of course, home loans is where all banks are bullish right now. There is a lot of traction as well, and it remains a low NPA zone for banks because, also because of the sentiment value that is attached, as Dinesh Khara, chairman of SBI, had said that people are more likely to pay back these loans. So we will have to see whether more banks come in and announce rate cuts as well.
All right. Well, let's talk about this a bit more. Joining us now on the show is Gaurav Gupta to talk about this, the founder and CEO, by the way, of My Loan Care. So, Gaurav, thanks so much for joining us. What exactly is causing these banks really to be in the race to the bottom of the good kind, of course, of providing the customer with the lowest home loan rate?
So, Mobina, first of all, thank you for getting me on the show. And let me say that, as you rightly said, this is clearly advantage borrowers. But to answer your question, what's happening is that, if I may say so, home loan seems to have become the only place to hide as far as the banks are concerned. And it's quite interesting that we're seeing a rate war on home loans at a time when the GSEC yields have actually been inching up. Uh, Probably for the first time in the history, are we seeing the spread between GSEC yield and home loan rate being less than 50 basis points now? What is actually happening is that banks are flush with deposits and liquidity as a result of that, but the other segments of credit are yet to take off. So as a result of that, banks have nowhere to go but to lend on the home loan side. So if you really look at it, corporate credit hasn't taken off because corporates are still holding back on their capex expenditure. SMEs are willing to borrow, but banks are not willing to lend except under government guaranteed schemes. And the retail unsecured loan market, as some of the senior bankers have been talking about on some of your shows, that segment has shown or is beginning to show some signs of credit stress. So, where does it leave a bank which is flush with deposits? I think the only place to hide is the secured home loan bit.
Okay, and that's the reason why they are scouting for potential home loan buyers and thus home buyers, pardon me, and thus home loan borrowers as well. So essentially, Gaurav, this flush liquidity coupled with the fact that the RBI as well is, of course, has its repo rates at those lows is something that's prompting these banks to, give such low rates. Now, additionally, Gaurav, this year, we are not in the same kind of a situation that we were last year. This year, we have inflation, we have all these other macroeconomic factors. If the RBI, let's say, changes their stance a little bit, just to remind all our viewers that banks look at what the RBI does in its bi-monthly meetings, pardon me, very closely because, they take cues from that and then reset their interest rates accordingly. So let's say, Gaurav, that if the RBI says that I'm going to tweak my stance a little bit. So I won't be cutting interest rates, but I'll now keep a neutral tone. Could that sort of cause banks to, look up, and would that put a floor of sorts on in home loan rates?
Our sense is that we may have already hit the lowest in terms of where the home loan rates could go, and we got to remember that the current home loan rates are probably 18, 19-year lows. Uh, with respect to what RBI could do, look, RBI, among other things, what they really look at is how inflation is, behaving. Then there are the other economic factors, for example, the pace of economic recovery, foreign portfolio flows, government borrowing. So I think all of that flows into the monetary policy review of RBI. I think, at least at My Loan Care, our view is that while the policy will continue to remain accommodative for some time to come, uh, the home loan rates aren't going to drop down any further. If in case the RBI was to move towards a policy which changes, let's say, from accommodative to neutral, the inching up of home loan rates could actually be pretty fast. As things stand today, what one can say with reasonable, with reasonable confidence is that rates aren't going down any further, at least on the home loan side. Uh, at what point in time do we actually see rates beginning to inch up is a question that will largely depend on how fast the economic recovery shapes up.
Okay. So, for an existing home loan borrower, somebody who's paying down their EMIs, is this a good point to refinance your loans, considering A, of course, their interest rates are much lower, and B, banks like an SBI are also now charging zero as processing fees?
Yeah, so I think absolutely. Now, when it comes to refinancing, what we would say is that in case there are borrowers who are at a fixed rate of anywhere up to 7.5%, it would probably make sense for them to stay where they are. But for borrowers who are on a floating rate or are paying more than 7.5%, either under floating or under fixed, it does make sense for them to refinance their loans. And as regards these offers on processing fee, you're absolutely right. Not just SBI, but all the major players in the market, at least till 31st March, are offering discounted processing fees or nil processing fee offers in the market. And so it makes sense for those borrowers to, benefit from that and move into what I would say, preferably a repo rate linked loan. Although the borrowers must keep in mind that as the interest rates begin to inch up, as in when they do, in case of a floating rate loan, they would see a slight increase in their interest rates also. However, over the next, let's say 6 to 12 months, that increase is not going to be more than 25 to 50 basis points. So it does, if you are paying more than 7.5% on your home loan today, by all means, it makes sense to refinance it at a lower rate.
All right. Now, the SBI chairman has very categorically stated that interest rates, home loan rates, these low rates are going to be here for a while now. They are not going to go up in a hurry. Of course, at the same time, fixed deposit rates will not go down more than it is at right now, because a lot of individuals depend on this FD income. Many of them still rely on FD as a very safe, secure mode of investment, and the only one, in fact, for many of them. So, do you echo that sentiment? Do you think that while you don't expect these rates to go down any more, I know you mentioned that you at My Loan Care believe that this is the rock bottom, but do you think this is where we will be for the next few years as well?
Look, I don't think so. I think when we really look at the expected trajectory for rates, we got to keep in mind that to a large extent it will depend on how the yield in secondary market will behave. As we discussed earlier, we are currently in a unique situation where the yields have actually started to inch up. You would have also seen that the deposit rates have also started to inch up. So in even one of the large PSU banks, including SBI, have done very select increases in their deposit rates by about, say, 10 basis points, 15 basis points. So I think with that supply side pressure being there, the only thing which is going to hold this back is essentially how fast or how slow the economic recovery is. And in case, and do keep in mind that we have a large government borrowing program sitting out there. So put all of this together, how long the banks would be able to sustain the current rates to a large extent would be a function of, how fast or slow the economic recovery is. Now, our guess, and look, I don't want to second guess the SBI chairman, but our guess is that a spread of less than 50 basis points on a home loan versus a 10-year GSEC is unsustainable. And so we believe that, home loan rates would begin to go up sometime during this calendar year, and not, we are at least not expecting them to stay here for the next few years to come.
Okay, I actually wanted to squeeze in one more question, and I think this would be an important clarification point for a lot of our viewers. As they are watching this program, they may be wondering that when I go to a bank, why don't I get 6.7 and 6.9%? Well, that's because there are spreads, add-ons, spreads based on your credit history as well that are added. Would have loved to get Gaurav's view on that, but unfortunately, we have to wrap it up. So, Gaurav, thank you. Thank you so much for joining us today on ET Now, and just sort of talking to us about this fall in home loan interest rates that we are seeing. According to Gaurav, it's rock bottom. We may not see rates go down further, and yes, it is a good time to refinance your loan. On that note, we'll wrap it up. Thanks for watching.